Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies in unrivaled investments. I'm looking for potential multi-baggers, folks, types of stocks that could potentially go up hundreds or even thousands of percent over time. Today, we're talking about Alibaba stock. Regular viewers know that I do own shares in Alibaba. I own the Hong Kong shares, which I bought with the brokerage platform Interactive Brokers. That's what I use. And I personally bought it before I even found out, before it was disclosed, that Charlie Munger, one of the world's greatest investors, also bought. So that means we're both been in a little bit of pain in terms of Alibaba, watching the stock continue to go down about 35% personally on my own cost basis on Alibaba. And so it makes folks wonder, like, well, wait a second, how much further can it drop? And, what's Charlie Munger doing? Arguably one of the greatest investors. And here it is, just today it came out early, that the Daily Journal company, a company that he oversees that manages a few $100 million of a portfolio, they doubled their stake in Alibaba. So what's that potentially mean for shareholders? Is there an important read through or anything that investors can consider? And so I'm going to talk about that in just 1 second. And it is important to remember that this is, what we're talking about here is Daily Journal. This is not Berkshire Hathaway. This is the Daily Journal Holdings, which is a couple $100 million. This is not Berkshire Hathaway, which is a couple $100 billion with a B. So this is much, much smaller company that Charlie Munger has discretion over. And it's also worth calling, look, $45 million relative to Charlie Munger's net worth of several billion. This is, very small stakes for him. That said, he is ultimately putting about 20% of Daily Journal into this. Now, also worth caveating, Daily Journal is an overcapitalized business. This is a company that has significantly more cash than they need to operate on this. So what are some of my thoughts, as we consider seeing that they actually recently doubled their stake in Alibaba? That's the key element, doubling their stake, increasing by 82%, now about 20% of the portfolio with an average cost around $190. So what are my thoughts as I look at it? First of all, yeah, it's nice to, admire someone like Charlie Munger. I mean, he's personally been a life hero as I've, read and watched him throughout the years. I used to be going to the Wesco meetings many years ago. Now it's the Daily Journal meetings. And it's worth understanding, look, he's still human. It's very possible that he could be wrong. And so it's worth calling that out. And there's lots of reasons that, you could be wrong with Alibaba. You could be wrong on the company itself, where you say, hey, this is just too murky. Maybe the capital allocation policies are just too hard. Maybe you're worried about the VIE structure. I personally don't think that would play out, just because I don't think China is looking to blow up, foreign shareholders. At the end of the day, they want to be a global superpower requiring the respect of global markets. There's also the risk that, wait a second, what's the risk that, the Chinese economy slows down? I talked about Evergrande and sort of here it is, this potential debt blow up in the construction sector. Maybe that'll slow down. I even talked about, blackouts in China. That'll definitely hit the business. That's more of a short-term impact. So here it is. These are all things that Charlie Munger has seen. He's even seen, the CCP wipe out a full sector, wipe out the for-profit education sector. And here it is, knowing that he still increased the stake, sort of seeing it. So it is possible that he's just wrong. That it's possible I'm just wrong, with my stake in Alibaba. So that is worth understanding. Look, everyone's human. You can make mistakes. It's also possible that, hey, folks like to joke, yeah, it's easier to YOLO when you're 97 years old. You live only once type of investing. The reality is this isn't a game changer for his own wealth. It's not a game changer even for Daily Journal. It's 20% of their portfolio. And so that is worth understanding. But look, that key risk that he's wrong is absolutely still there. It is worth sort of thinking about that, what? This probably means that Warren Buffett's Berkshire Hathaway probably isn't buying, because Charlie Munger would always like to steer way clear of any sort of perceived conflicts of interest. So I don't think that he would be buying for this vehicle that he helps control, where Berkshire might be interested. So that is, I would argue, a counterpoint where he can point out all these bullish points about Alibaba, but Warren Buffett is probably seeing the equally bearish points, and that's why he hasn't pulled the trigger. So that is worth sort of understanding as you think about it. Or lastly, it's possible, hey, maybe he is right. Maybe he is, calling something out where he says, oh, I'm seeing the same upside that I've talked about in some of these videos, sort of penciling out the rough valuation, thinking about, for multi-baggers, I talk about companies that could potentially go up hundreds or even thousands of percent over time. I don't think this is the type of setup that can go thousands of percent, but I think if things work out, you are looking at a couple 100%. That's how I'm thinking about it still. And so let's actually talk about that valuation framework, as we actually, do a little bit more of a dive. And I've done deeper dives in terms of looking at their business in the past. But, looking at it, look, they've grown very nicely in the years prior. I'm penciling out, effectively around 30% growth this next year, which is a significant deceleration from what they posted so far. I'm assuming margins well below let's say the long-term 40% margins. Now, they are investing in a lot of things. So this is well below their current margin structure, saying, hey, they're investing in lower margin businesses. I'm assuming their growth continues to decelerate significantly, looking out over the next 5 years, saying 10 to 15%, annualized revenue growth, and let's say a mid to low teens multiple 5 years out. This is just for their core commerce segment. This is not for their entire business. Just one segment, effectively representing 80% to 180% of their current market cap, saying, hey, just if this core commerce business has these sort of parameters of, let's say, mid-teens, low teens growth, mid-teens, low teens earnings multiple, 5 years out from now, you're effectively saying down 20% or upside of 90% when you start layering on other core assets. Even the assets that folks are saying, well, wait a second, aren't you worried about Ali Cloud and, potentially having to, transfer less data from the state-owned enterprises to Ali Cloud, or Ant Financial not growing as quickly because their algorithm, sort of gets blown up. Maybe Ant Financial takes like an 80% haircut. Looking at this, you're still layering on assets, even with the draconian look. And I think you're still potentially, looking at a stock that's $400, $500 stock for Alibaba stock, potentially 5 years out. And this is, layering in the core commerce plus everything else. If you're just focusing on core commerce, you could still pencil out a reasonable risk reward when you're looking at this. And it's not only that, looking at the news has also started turning a little bit more favorable. We're just earlier today talking about President Biden effectively looking to warm up the relationship with China if they start meeting us halfway with prior trade agreements. Effectively, if they step up on, let's say, buying U.S. exports, this relationship can improve. So maybe that alone could help the sentiment with Chinese equities. So what am I personally doing? I'm going to do a quick plug here where, once again, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you go to unrivaledinvesting.com, first week of the month, I call out, you decide to join, the Unrivaled Investing journey. The first week of the month, I call out, my full portfolio. By the end of the month, I call out a potential multi-bagger. And on a daily basis, I'm interacting with the Unrivaled Nation with our exclusive Discord, community that talking on a daily basis, talking about, ideas, looking at companies, sharing ideas. And so as we look, what am I personally doing with this? I personally own a basket of Chinese stocks. It's about 25% of my portfolio at cost. Now it's about 20%. It has been a haircut. This has gone against me. Alibaba, as I already mentioned, is already down about 35% from my cost basis. I'm pretty sure around that level. I own the Hong Kong shares, as I've already talked about. And so every time I see bad news, it's about revisiting my thesis, making sure, hey, could I still pencil out an attractive risk reward just based on, let's say, slower growth? Maybe it's just because, there's a slowdown in construction or what have you, or just tougher policies. Could I be wrong? Could Charlie Munger be wrong? Of course we could be wrong. So it's also that, as regular viewers know, I also, in Unrivaled Nation, I have talked about hedging before. That's more based on dynamic pricing that I look at. And it is worth calling out, as I'm looking at this, that Alibaba is just one part of my basket of Chinese equities. That's about 20% of my portfolio. I actually have higher conviction bets on two other companies. Alibaba, I think, is my smallest of, or relatively smaller position of my Chinese bets, because one is like a company that trades below liquidation value that's growing at a good clip, a behemoth of a company trading below liquidation value. And another is a company that's more aligned, I'd argue, with the CCP, where it hasn't had these fines. If anything, it's sort of been called best in class, has been taking share. And so those are the types of things where, I recognize there are risks with Alibaba. So that's the reason why it's a part of my portfolio. It's probably down to like 4 or 5%. But the bigger part of my Chinese bets are these other ones that I've called out exclusively for Unrivaled Investing Journey subscribers. I do, as I mentioned earlier, I call out different potential multi-baggers each month. It's not always China. That was, that is a set part of my portfolio. More recently, I've been focusing on the healthcare sector as well. For those folks that are sort of saying, well, wait a second, I'm concerned about the economy potentially turning. I want to own things that might grow regardless of the economy. that's generally the healthcare sector. So I have called out a few things recently. One's a cheap company trading below, like a very reasonable free cash flow multiple, just super cheap. And the other is hyper growth. So that's for Unrivaled Investing Journey subscribers. And if this video has been helpful for you, talking about Charlie Munger doubling down on Alibaba, making it now like a $45 million bet. If this has been helpful for you, if you enjoyed learning about it, please make a point of hitting that subscribe, hit that thumbs up button. Thank you so much for watching.